My guest today is Ayanda Seboni, Executive for Mutuality at PPS. And today we'll be talking about the concept of mutuality and what it means for members. Ayanda, it's great to connect, and I am excited to hear more about what mutuality means for the client. Thank you for your time. So I think let's set the scene. What does mutuality mean, and why does PPS believe in this model?
So mutuality is our business model. It's how our business is structured. You know, when you do accounting 101, you're told there's a sole proprietor, there's a partnership corporation, there's also a mutual. A mutual, unlike other forms of ownership, is owned by its members. So by virtue of being a member of PPS, we don't talk about clients, we talk about members. You have the rights of a shareholder. So our business is different in that we don't have a family or a person who is a single shareholder. Anyone who takes up a qualifying life product automatically becomes a member of the society. And PPS, the S in PPS actually stands for society. So it's Professional Provident Society. And when you become a member, it entitles you to sharing in the profits of the business. But another interesting fact is that you actually are part of the governance. So our board is run by our own members. So members elect representatives to sit on the board on their behalf. So PPS is a for us, by us type of business because the members are the ones who are being served, but they're being served by other members who work as part of the organization or those who represent them as part of the board.
I'm glad to say that I am a member of PPS.
That is very good. And everyone who's listening should be if they can become.
Yes, the model makes so much sense. So how does the mutual value proposition give your organization or gives PPS a competitive advantage over other insurers?
So as I mentioned, because our members are also the consumers of the products, we don't have that other stakeholder that is the shareholder who's looking for a specific return. So when you join the society, you get your products, and our job is to make sure that we are fair between members. When we have a claim, we look at the claim and make sure that people that qualify, because the event that they've claimed for is a qualifying event for a claim, get their claims paid. And if your claim, if you don't ever claim, you still get the profits back. If you look at how much we've distributed over the last 10 years, it's in the billions that we've allocated to our members. And when they get to retirement age, they then have an option to either take that money or to keep it as part of their retirement savings with our PPS Investments business.
Do you believe clients, members, are really aware of what mutuality means for them? Do you think that all clients get the message of the advantages of this business model?
So I wish I could say yes, but I can't say yes because if I could give you a rand for every time somebody said to me, that's just too good to be true, I would be a very wealthy woman by now, or every time I've heard that sentence being said. It's because it's such a virtuous cycle or circle, our business model. It's almost unbelievable that you can join, get superior cover, and still get the profits from the business. So a lot of people struggle with understanding that, but once people understand it, then they love it. And the proof of that is if you look at our attrition, we've got the lowest lapse rates in the industry simply because people understand the value that they derive from PPS, especially in the long term.
PPS is a member of the ICMIF, International Cooperative and Mutual Insurance Federation. I think it's an important part of the discussion. Maybe you can share some stats in terms of the members on an international scale, where South Africa fits in terms of the amount of companies who operate under this model, and what membership to this body means. It's a mouthful, but I'm sure that can be answered all in one.
Yeah, so mutuals around the world come together under ICMIF, as we like to call it. And it's a federation for all mutual insurers around the world to come together, and it's a non-compete kind of space. So we get to leverage the insights and information from around the world. And it's amazing how the challenges that we think we face alone in South Africa are very common in other parts of the world. But what is interesting is that the mutual model is a lot more popular in Western Europe and North America than anywhere else in the world. So if you look at insurers around the world, in North America, it's almost over 30%, and Western Europe, over 30% of insurance companies are mutuals. In South America, that goes down to about 10%, and in Africa, it's about 3% of businesses are mutuals. We are the biggest mutual, and especially working in the market that we work with. There is another bigger mutual that operates in the funeral space, but in South Africa we are definitely the biggest. And then there's a couple in Eastern Africa and Northern Africa, but it's not as common. And I find this very odd, because if you think about mutuals and how similar they are to stokvels and how common stokvels are in South Africa, you would think that throughout the African continent it would be the default method of doing business, but it isn't. And our job, we've given ourselves a mission to make mutuals popular again and make them well known. So if we get our job right, we're going to get more people starting more mutuals, and for the benefit of communities, because mutuals are the kind of business that actually adds commercial value, but they also are good for the community by design, because they are community orientated and they look after the communities. In the case of PPS, our community is a graduate professional community. And why the graduate professional community matters and is significant in South Africa is because they pay the biggest amount of taxes. They are the skills base of the country. And if the professionals are well taken care of, the country is taken care of, because they create jobs and they keep the economy sustainable. So we're very protective of the professionals, because we need them to be sustainable in order for the country to be sustainable.
It's maybe a rhetorical question, but why do you think is there not more companies in our space operating on this model?
So the model itself tends to be quite altruistic. If you think of PPS, it was started by 8 dentists in 1941. They put their own capital. Not only capital, but they put their time and everything in there. But they didn't take a slice of the business for themselves to say, okay, we've put in our own money here and we want 10% of this business. They democratized the business and said anyone who is a graduate professional who comes into the business gets to share in the business based on how they contribute towards the business. Now, there are very few people who will put their own capital towards something and then say, I don't want a return for myself. So perhaps that is the reason why, it's not as popular, because it does cost money to start up a business, and to do it for the benefit of a community is not as common for people to do. So I think that's maybe the hurdle that a lot of people experience when they think about it.
Is there maybe an example or a bit of a case study that you can share where you can really explain the value of this? Does it mean that a client with more products, for example, PPS insure, life and investments, get a lot more than the guy with a big investment? Maybe just a little bit of a explanation there.
Yeah. So how we share value with our members is, if you've got a qualifying life product, then you get entitled to a profit share account. And that profit share account grows every year with all the operating profits that the business makes. So a normal underwriter will have, underwriting profits and all sorts of other operational profits that come together, and those are divvied up with the shareholders. In our case, we share those with our members through allocations. So the profit share remains notional until the person turns at least the age of 60 and decides to vest that profit share. But every year, your slice of that profit is kept in your notional account, and any growth that comes from investments as a result of this capital that is being invested in the markets is then allocated to you too. So if your premiums are X and your share in the profits in year 1 are Y, every time you get, as the year goes by, you get the interest or the returns from the market on that. The following year, you get the X plus Y, right? And then you get the next year's allocation. And over time, this grows. And the example that I can quote to you is this year, we've exceeded the 10,000 mark of people who've had more than R1 million in their profit share. Now, for you to get R1 million in your profit share, it means that the allocations that we've given plus the investment returns have exceeded that point. That's equivalent to getting dividends of R1 million, but without putting any capital of your own, without tying up any capital or putting any capital at risk, because that is happening because of the operations of PPS. So it is significant. And if you think about it, those people that have had the R1 million profit share, there are thousands, tens of thousands more who've had hundreds of thousands in their profit share account. So this is a massively value-adding, machine for our members. And because we run the business very strictly from a governance perspective and from the way that we measure ourselves, we are able to create this value, and members benefit from profit share. But another way that they benefited was during COVID. As you would know, our product is our sickness product is a sickness product. So the peril that we insure is sickness. It's not necessarily the loss of income. So there were quite a lot of people who had to stay home because they were waiting for their COVID results. And we took a decision to pay them, even though it had not been proven that they were sick, and they might not have lost all the income, but we still paid because we are a mutual, because we look after our members, and because we don't have that conflict to say, well, what is the shareholder going to think? We are always looking for ways to create value for our members. Another way that makes us, that we've done things differently is partnering with the South African Health Business Academy, creating a business school for medical professionals, for them to be able to run their practices in a way that is a little bit more business-like and understanding the fundamentals of business. Because our clinicians go to school, they study, but they never really learn how to run a business. So the one program is Transition to Practice, where our members are taught how to transition from being, let's say, in state to starting your own practice. The other one is practice growth strategies, how to grow your practice, and then practice succession. Those elements we do because we're mutual, because we're interested in making sure that our members' financial lives are well taken care of, and they've got solutions that help them, even if it's not a product per se, but we're giving them the guidance and the support because we're a lifelong partner for their financial well-being.
That is quite amazing, especially that practice part on the business side for medical professionals. Do you insure students, for example, studying medicine or any other professional degree? I'm specifically asking actually about doctors. Do you insure, can a student studying medicine already take out a policy with you?
They can, provided that they're in their 4th year of study, because our membership starts from 4th year. And we've got premiums as low as 50 Rand. And our members can then take that up, and there's a fixed amount in terms of how much they are covered for while they're a student, and when they transition then and start working, they can then match it with their cover with their actual income. So we definitely take care of students, even on the ProfMed side, which is the affiliate of PPS, the medical aid. We've got cover for students, because sometimes students are above the age of 21. Some medical aids will carry them until 21, some of them until 24. But members, can have their children who are studying professional degrees to have ProfMed medical aid, which covers them, and it's brilliant rates for students. Okay, and brilliant cover too.
Yeah, that's very good to know, because it's a challenging market, and it can be an expensive market for students. So that is really good. And I think it's important, when you capture and you get those students while they are still studying, you'll keep them for life, right?
Indeed, we do. Many of our members joined us as students, and they've stayed with us because of the value that they get from PPS.
Yeah. The role of the advisor in all of this, how important is that?
Well, there is no business without an advisor. The role of PPS and the role of advisors are completely different. The advisor partners with the member to help the member create the right structure for their specific needs. We come in with a big balance sheet and the actuarial know-how to help people protect themselves from a risk management perspective. But PPS and the advisor, we are working together in order to solve for the member's needs. So for us, we are committed to an intermediated model, because our type of products are highly complex, highly specialized, and you need someone to sit across with the member to simplify the information, number one, and also to educate them for what it is that they need. So for us, the intermediary is key. They are a very, very important stakeholder, because and we get a lot of insights from them as well, in terms of, this is how you can improve things, this is how this is what's working for us, etc. But for us, it's a no-brainer. This is not coupon insurance. These are structured products that are for people who've got very complex estates, many a time, and they need to take care of themselves. They've got multiple sources of income. Even if it's not multiple, it's huge incomes, and they need to make sure that they are well taken care of. So the advisor is there to give them the right advice for the life stage that they find themselves in, and for the conditions that they find themselves in.
The role of the advisor is critical. So a last word, Ayanda, to the FAnews audience, who is obviously in a big way those advisors. Anything you would like to close off with?
So the advisor, I like to say, is almost one of the most intimate relationships that people have with someone outside of a life partner or family members, because with your advisor, you have to share everything. You cannot get someone giving you advice if you're not telling them the truth. So the role that they play is absolutely important, because when someone comes to you as the advisor, they're saying to you that, listen, I am trusting my hard-earned work, my income, my life. And I'm hoping that with the work that we'll do together, you're going to protect me, so that when I'm older, all the outcomes that I had, the wishes and dreams that I had for my children, for my family, can come true. For the retirement that I want, if I'm no longer around, my children are well taken care of. And that all begins with that conversation with the advisor. So it's not a small job that you're doing, and I've seen cases where people become actually house friends with their advisors because the relationship is so close. And I've also seen, very sadly, where people don't have respect for the role that the advisor can play in their lives. At the end of their working careers, that's one of the bigger regrets that they have, because they actually don't take care of themselves, especially the people that know everything. When they look back, they realize they didn't know everything, and had they respected the advice from the advisors, they would have been better off. So my experience, if you look at when we've done the research with over 55s, there were three types of people. There were people who were financially secure. 100% of those people always had a strong advisor relationship, because advisors are not emotional about your money. They are emotional about your success. That's a very big difference. The second group were people who were on the mend. So people who woke up in their 40s and they realized, oh my goodness, my things are not okay. Then they found an advisor. And they were not as well off or as well protected, but they were getting there. You know, they were going to end somewhere where it's a little bit more comfortable, but not dire. The third group, 100% of the third group, were people who had a transactional relationship with their advisor or people who had no relationship with an advisor. And many of them found themselves, you know, at age 55, not having much in terms of real assets. You know, it's just a house, a car, mostly a very expensive car, and a house, but no real assets. Because they were making these decisions, they fall to the whims of whatever is trending at the time or their own conspicuous consumption. So the advisor is a great partner also to stop yourself from self-destruction. Because if you talk to me, I'll tell you I need that car. No, I don't. I actually don't need that car. But what I do need is to protect myself for towards my retirement, because being old and poor is not a good combination.
Thank you, Ayanda, for those insights. It really makes sense and reiterates the importance of the role of the advisor. Thank you for your time. Always great to catch up. And we are excited to hear the results coming out soon.
Yes, it's a few more days to go, 12 to be exact, and then we're going to be releasing our profit share statements to our members, and together with the intermediaries as well, sharing with them how the year was. But all I can say to you is watch the space. Something very exciting is coming.
Oh, very exciting news. Thank you very much for sharing that. It's Rianet Whitehead, FAnews Editor, signing off.